a great panel. We have Annie Jiang, who is the Director of Investment Asia and MENA, Middle East and New... You can tell me what the rest of the acronym for that one is, but Annie is the Director of Investment at Invest Victoria, the State Government of Victoria's Investment Attraction Agency. Then we have Peter Cook, a Director at Novarti, of course, the ASX-listed company. He's also a NED at ATX Malaysia and the Chairman of AUDC, with its high governance in Australian dollar-backed multi-chain AUDD stabled coin. And Cheryl Chen, the Head of Content for Asia at Money 2020, where she does what she's most passionate about, connecting people to ideas, resources and new connections. Please put your hands together for our fantastic panel.
Good afternoon, everyone. So I'm Annie Jiang. I'm the Director for Investments that heads up Asia and MENA, which is the Middle East and North Africa at Invest Victoria. And today I'll be your moderator. So Invest Victoria, we are the Victorian Government's investment attraction agency. So through our 23 global trade and investment offices, we provide support to companies to expand into Victoria and also Victorian companies to go global. So the Victorian Government has supported FinTech Australia since 2016 to host Intersekt in Melbourne. And this year we're very pleased to be the presenting partner. Sorry, I just had to do my plug for the Victorian Government. I think that's my role for today. Victorian FinTech companies are becoming some of Australia's biggest business success stories, not only in Australia but also overseas. So today I am joined on stage with some FinTech leaders who have navigated and successfully scaled their businesses into Southeast Asia. So maybe first off, I'll just let the panelists quickly introduce themselves and provide some initial thoughts. So maybe Peter first.
Good afternoon all. Peter Cook. I'm a Director of Novarti Group Limited and also a Director of AUDC Proprietary Limited, which has got an Australian dollar-backed stablecoin. In terms of some of the expansion steps we've done, we've worked with Ripple for a cross-border stablecoin and digital asset project into the Philippines. We bought a business in Malaysia, which is essentially around cash collections and digital payments. Within New Zealand, if I want to add them into Southeast Asia, we got acquiring and issuing licenses and the equivalent of an AFSL there. And currently we are working with the Monetary Authority of Singapore for a proof of concept with an Australian dollar stablecoin to a Singapore dollar stablecoin to prove up some trade transactions.
Yep, Matt.
Hi everyone, Matt here, VP of ANZ at Airwallex. We are a Melbourne-born fintech. We power cross-border money movement. And whilst we started in Australia, we quickly expanded across Asia Pacific, including parts of Southeast Asia. So we're live in Malaysia and Singapore and the rest of Asia, including Hong Kong and China as well. We currently can create and set up international bank accounts for customers across Malaysia, Singapore, and Indonesia, and soon to expand into many other currencies as well, including Vietnam and Thailand on the horizon. So excited to kind of share a little bit of our learning as we expanded into Southeast Asia and how we navigated some of the complexities from a regulatory standpoint as well.
Thank you. So my name is Cheryl. I am the head of content at Money 2020. So Money 2020, we are a global events platform with shows being held in Vegas, Amsterdam, and what I'm most personally excited about, because I'm part of the Asia team, is Bangkok, Thailand. So we've actually just concluded our first launch show in Bangkok, Thailand. And what my team does is that we actually identify the right themes, the topics that is pertinent to FinTech, actually the wider tech industry and finance industry across Asia Pacific, and find the correct topics, sessions, themes that will be discussed for our upcoming show that's happening in April 2025. Yeah.
Thanks. So to make our panel discussion a bit more interactive, all my questions will be open to all the panelists. So let's get started with market dynamics. So Southeast Asia is a highly diverse market with varying levels of fintech adoption. So what do you see as some of the key factors driving fintech growth? And how are these factors changing in the region? So maybe we'll start with you, Cheryl.
Yeah, so maybe I'll just give a quick lay of the land of how things are like in Southeast Asia. So when people usually talk about Southeast Asia, you have to always talk about how fragmented it is when you compare it to the rest of Asia Pacific. And there are some very unique traits, unique points about Southeast Asia. So the first is the growing middle class. That is countries like Philippines, Vietnam. We're starting to see a lot of growth from those countries. And from a lot of emerging countries in Southeast Asia especially, we're starting to see more young people, which is the reverse of what you'll be experiencing in countries like Japan, for example, where you're facing aging population. So in Philippines, in Vietnam in particular, Indonesia as well, more than half of the population, they are actually very young. And what this means for the population is that this means that a lot of them are digital natives who have gone through leapfrogging. So because of the way things are in their various markets, maybe they don't have enough capital to purchase their own PCs, so they move on directly to a smartphone, which also leads us to the high internet penetration rate in Southeast Asia. And you have a lot of these factors coming together, and this is, of course, catalyzed by COVID. So what we actually saw, especially through COVID, is the rise of e-wallets and QR code payments. So I was speaking to, I think it was Bank Danamon and BigPay. So Bank Danamon from Indonesia, BigPay in Malaysia, and they were both saying that because of COVID, there's this muscle memory that was trained in the population. So upon going into places like restaurants, you have to check in through a QR code to go into the places. And because people are so used to it, this actually facilitated the adoption process of QR codes. And then I think we can go into e-wallets a little more, but it's a lot of these factors that is fueling the growth of adoption of fintech in Southeast Asia.
Thanks. Over to Matt.
I broadly echo sort of what Cheryl has kind of shared. I think the first order impact of this rising middle class, young population, obviously internet penetration, digital wallets, and then there is this second order impact that we generally see in terms of like ancillary fintechs coming to life, right? So like, share trading apps, investment apps, like robo-advisory, huge opportunity for these apps, and they're all starting to emerge in Southeast Asia, and some things that have already been live in, say, the US or Australia for many years now, starting to gain traction a lot more in Southeast Asia. And what we in particular see, because at Airwallex we're more B2B focused than B2C, is that a lot of these Southeast Asian markets from a regulatory perspective have regulatory frameworks that are more favorable to a B2C use case than a B2B use case. So like examples include, like outside of Singapore, a lot of the countries in particular have very strict maximum limits for transaction amounts, right, that meet the needs of consumer users, not necessarily SMEs or businesses. And so we hope in the next 3 to 5 years that the regulatory environment will catch up on the B2B side, but definitely the bigger opportunity within fintech currently sits in B2C in Southeast Asia.
As said before, we are looking at markets that are absolutely mobile first, and then with the follow-on services driven around QR codes and digital wallets. But I think if we go to thinking about behaviour, we have consumers who are highly aspirational in Southeast Asia to be able to access any level of service that they can see essentially on TV or on YouTube or whatever that is seen is in a traditional first world country. But in fact, so it's not just the consumers who are aspirational, it's the nations as well, that they want the services that they see in other countries to be available for their populace. So we've got very strong, let's call it a market planning cycle from government and consumer aspiration, which is using the new tools to drive new and essentially leading services.
Thank you. So Southeast Asia, has a population of over 650 million people. So I'm sure many of our audience here today are kind of looking at expanding into the region because of the tremendous opportunities. So what insights can you share about your approach to entering and scaling in Southeast Asia? And how do you assess partnerships and the role that partnerships play in your market entry strategy for the region? Maybe we'll kick off with Matt.
I think so we've been live in Singapore and Malaysia for about 3 to 4 years now. And I think what we see at least is very different, like very subtly different behavioral habits, right? So for example, Southeast Asia, and I'm probably overgeneralizing here, but higher degree of sensitivity to price. They are traditionally a bigger or have a stronger habit in terms of savings, right? And so if you look at not just in fintechs, but you look at retail, for example, like retail and e-commerce across Southeast Asia, massive promotions, massive offers a lot of the time to attract users. And that's what we also sort of see from even a go-to-market perspective. We're working in a market that is used to having offers and promotions from a customer attraction perspective. And so if you look at a lot of the, for example, wealth techs and share trading apps that are launching across Malaysia, Singapore, etc., a lot of them always use aggressive offers as a token to acquire customers, much more than Australia. Not saying we don't do that in Australia, but these are some of the nuances there. And then there is also a degree of sensitivity towards price over product experience necessarily. And so Australia has a stronger preference for having seamless products versus across Southeast Asia. At least what we see is that the messaging we've kind of like experimented over the years, messages that resonate a lot more in Southeast Asia, at least what we've kind of seen is messages around sort of like cost savings and how we can actually deliver bottom line sort of like profits back to the businesses. And so these are some nuances from a go-to-market perspective that we've learned so far.
And maybe over to you, Peter.
I think we've seen, if you start with a comparison to Australia, very lowly banked populations, and so services that we would see that launch from a bank first approach may be in fact launching from a digital wallet first approach, and looking as a company that might want to expand to another market. Whereas for, say, traditional products, software or hardware, you can think in terms of traditional models of a local distributor or agent, or maybe setting up yourself. I think for financial services, you're obviously thinking about what licensing do I need? Does my local partner have the right license? Can they hold the license? Will the license be impacted if I, as a foreign company, come in and take 51% or 100%? Do I have, gently putting this, do I have the right government and corporate networks to sustain my business model if I'm not a 100% local company? So, you've got those issues, just risks, I guess the normal risks of entering any new market. And I think that given, lower margins, or lower, let's call it lower per transaction prices and tight margins on a lot of services, I think in most countries in Asia, you need to be able to scale very quickly to get to some sort of critical mass and reasonable return on investment.
I just wanted to echo on Peter's point on, especially when he talked about digital wallets. So, especially in Southeast Asia, digital wallets are very prevalent there. And why is this so? Because 70% of Southeast Asia is either unbanked or underbanked. So which is why you're starting to see services like maybe GCash in Philippines, Dana Pay in Indonesia, coming up with e-wallets, which is rapidly adopted by the population, because this is how people who have the unbanked or underbanked, they are able to access funds, subsidies from the government, for example, make transfers, make transfers to their peers, to other businesses, without having a bank account. And then you're starting to also see FinTech solutions come up. So you're having new banks, and basically consumers are able to open bank account with no minimum savings. So that is one. And then to Annie's question on cross-border expansion, what we're also seeing is that we're seeing large corporates coming into Southeast Asia through the partnerships method. So for example, MUFG, which is one of the, I think, top 5 largest banks in the world, their expansion strategy is not really to through M&A and then all the banks that they acquire become MUFG, but they still retain the local flavor of the banks that they acquire. So Bank Danamon is one, Krung Sri Bank is another one, and then from there they set up their various funds to power and invest in the various startups in the region, and then of course doing it through the digital wallets through the various banks. And then the last point that I want to drive home is, especially when you're looking at Southeast Asia, you need to think about what is the impact, what is the value of my service and product, that is it empowering humanity, for example, especially in Southeast Asia.
So just picking on the point around obviously the largest kind of unbanked population, and the I guess they're really kind of emerging. Southeast Asia is actually an emerging market compared to Australia, where we're a lot more kind of mature. So do you have any points to add around the challenges about potentially localizing your services to be able to service that segment? Not sure who wants to take that question. But I guess, do you maybe Cheryl, kind of seeing a lot of the global fintech companies entering Southeast Asia, are they kind of working with local partners to really localize their service offerings to actually be able to service a segment like that?
Sorry, I couldn't really hear. Your question is on localization? Yeah. Localization strategies.
Yeah, basically localizing they must localize their services, because I mean the products that we have in Australia service a mature market, and then when they go to Southeast Asia, where you have such an unbanked population, a lot of people are still using cash. Are you finding these foreign fintech companies, they need to kind of find the right partners and then, localize their services to be able to target that segment?
Yeah, definitely. So localization is a huge thing, especially in Southeast Asia, in such a fragmented market. So even though on the map it seems very condensed, but your go-to-market strategy in Singapore, for example, it's going to be vastly different from Indonesia. I think, Matthew, you'll be able to speak a lot to this localization also. So that is where we're starting to see a lot of larger corporates. They work with various partners across various verticals into the various markets in Southeast Asia.
I think for us, the localization for us at least is a second consideration. The number one challenge typically across Southeast Asia is regulation, and how every market is different, right? If tomorrow we wanted to launch into Thailand, for example, there is a restriction at the moment of only allowing transfers of up to, I believe, 49,999 Thai baht per transaction, cross-border. And so for us to launch a successful proposition targeting SME businesses in Thailand, I think that's the first barrier to overcome. before we even think about localization. And therefore, like for those in the room who are kind of thinking about sort of launching fintechs in Southeast Asia, it's about sort of really understanding what your individual solutions or apps can and can't do in each jurisdiction to actually prove out, is there a viable enough business model here for you before sort of like thinking about sort of the go-to-market side. At least that's what we've kind of found so far.
Yeah, we're actually going to dive a bit more into the regulation space because, as you say, every single country has its own framework. So what are some of the challenges? I mean, you touched on some of this already, Matt. The challenges in navigating the regulatory environments in Southeast Asia. I mean, how do you see the role of regulators evolving in the region? Are there examples of positive regulatory frameworks that have accelerated fintech growth? And where do you kind of see room for improvement?
I mean, I'm by no means a regulatory expert, but I can say for sure that Singapore, compared to the rest of Southeast Asia, probably has like the most advanced regulatory framework. And that's why like Singapore becoming sort of like first choice for us, and then Hong Kong also has very favorable sort of regulatory framework. And then the rest of Southeast Asia, like Malaysia, Indonesia, Thailand, Vietnam, there it is incredibly challenging, right? And when you go in, obviously first step is to understand sort of regulatory framework, and I would say that to date, I would like, from our perspective, because we operate in the B2B space, it is sometimes relatively unclear what type of licenses we would need to operate in the market for the services we want to provide. And so that is a big challenge, and I definitely see that the regulatory framework for B2C services a lot clearer, right? Given, I think what Cheryl was saying earlier, this increasing sort of demand for digital wallets, and so with that, obviously comes sort of like regulatory sort of frameworks that govern those types of products and services in the market. For B2B products, it is still widely unpenetrated in each of these markets that we operate in, and that we want to continue operating and expanding into. And that's what we've been continuing to work with regulators in each market. But it is a relatively slower process, given that at least what we see is that on the B2B side, not necessarily a strong imperative at the moment as compared to B2C solutions, given the market dynamics and the trends in these economies.
Thanks. Over to you, Peter.
I was just going to sort of get down into the pragmatics of owning, buying, selling a business that you may have running in Southeast Asia. And if you think about valuation of a business, a financial services business, where you're going to be investigated about your KYC and AML processes. So if you had 50,000 customers in Australia and someone was doing due diligence, you could, with reasonable processes, probably come up with 50,000 passports and 50,000 driver's licenses for your 50,000 customers. But in many countries we're talking about, the consumer doesn't have a passport, probably may not have what we would call a driver's license, may have some sort of ID card or something else. And so, KYC processes may well be abbreviated or certainly very different. And so the ownership of the customer base is very different. And I just think that notwithstanding the financial throughput of that customer base, one day the valuation of that customer base may be quite different.
Over to you, Cheryl.
Yep, so to echo Matthew's point on how Singapore is leading the way in comparison to the other Southeast Asian countries. So actually what happened in 2021 was Singapore and Thailand, they actually launched the world's first QR code-based real-time payments system between PromptPay and PayLah. And that was world's first. So instantly you can receive payments. You can send payments to a merchant when you're shopping in Bangkok, for example, with a Singapore bank account. And in 2023, 5 countries, Singapore, Thailand, Indonesia, Vietnam, and Philippines, they came together to sign an MOU on the Regional Connectivity Network. And these are little steps to pave the way towards regulatory harmonization. And we're starting to see more instances of that because regulators, they are aware that a lot of things has to be done to promote innovation on the fintech side. So hopefully, I think slowly but surely we'll be getting there towards regulatory harmonization, and we'll wait and see.
Thank you. I think we have time for one question from the audience. Oh, yes. Sorry?
5 more minutes.
5 minutes. Oh, we've got 5 minutes, so we probably have time for a couple of questions. So I'm going to open it to the floor. You can raise a hand, or there's a microphone in there. Yes?
Just a question around investment flows and capital raising. So just wanted to understand if there are any trends that you're seeing in capital flowing into fintechs in Southeast Asia. Is there any difference to the money that flows into companies here in Australia or globally?
What I will say to that is in particular US money will worry about Sarbanes-Oxley type issues and I've just forgotten the words, but Foreign Corrupt Practices Act and so forth. So I think for some US money in particular and maybe some European money, there is a reluctance about investing in developing markets in particular, and I'll say unfortunately that drives lower value, less people that are prepared to invest and potentially lower investments. Interestingly, you could argue with someone like Airwallex that the great point about that is that they have access to these enormous growing future financial, much stronger markets. So anyway, it certainly affects initial capital flows.
Yes, sure.
So actually, right before Money 2020, I was at a VC firm, and part of my role was to do fundraising, which is very fun when you're in the middle of fundraising winter. But what we saw is actually, we started to see signs like actually Southeast Asia focused dry powder, it's actually at a record high. And from the other side of the table, what I have been noticing is that a lot of these, they come from American or European funds, so the likes of your pensions, your institutionals, who have a fund mandate of investing in emerging countries because of the high risk, high returns, and that's what they're after. And I think there's also another session on like greenwashing, but there's a little ESG element, actually a huge ESG element that a lot of these funds, they have. So especially in Southeast Asia, in emerging markets, there has to be an ESG focus. So it's actually very dependent on what your company is and where you're raising your funds from, but dry powder is out there.
Maybe Matt, Airwallex being such a great example of, how to fundraise. Have anything to add?
Look, we fundraise around the world. We've raised, I think, close to 900 million to date. Most of our investors so far, and this is by no means a representation of the market, have come from either Australian investors, because we were founded in Australia, or the US. I think we have spoken to some global VCs throughout fundraise processes, and what is interesting is some of these global VCs, like Sequoia, for example, they have offices all around the world. There is a stronger focus on fintechs, at least from an Asia standpoint. So like US, notorious, obviously invest a lot in the likes of Robinhood, Brex, Ramp, etc. But across Asia, the two key regions that have a lot of investment appetite for fintechs actually sit in China and India. And there have been a lot of success stories out of India as well in this space. And so the amount of funding focused on fintechs are a lot larger in regions, then we've spoken to a couple of VCs across Singapore, Malaysia, and maybe we were just not the right profile for them, but we didn't sort of like get as much appetite so far. So that was kind of like our learning so far.
Thank you.
Thank you all. I felt the Oscars music's going to start playing, so we better quickly wrap up. Thank you to our panelists, Cheryl, Matt, and Peter, for sharing your practical advice. If anyone would like to continue this conversation, I'm sure our panelists is happy to be connected via LinkedIn. Okay, thank you.
And thank you so much to Annie too. I do know organisations like